Welcome to Illuminati Silver. We tell you the truth about silver. Today is Tuesday the 16th of February 2021 and we're looking at the falling gold and silver prices today below their first key support level. So let's take a look. For us, this is a late video going out as it's currently 21:18 GMT. But we've held off as a few hours ago we were of the opinion that both gold and silver were going to fall below or through a key support level, even though particularly silver had been much higher earlier today. And we wanted to ensure that it was not just a flash move, because both gold and silver have been oscillating. Well, at the time of writing, gold is down $25 today and stands at $1,794, having been down to $1,790 at 14:30 GMT, bounced back and then has fallen again. So it's fallen below now what we class as a key support level, or its first key support level of $1,800, and is held there. Silver actually fell below its key support of 27, but bottomed at $26.90 half an hour earlier than gold at 14:01, and has recovered most ground and stands just 6 cents down today at $27.24. So it's back up above that key support level. Gold, we suspect, is now on a downward trajectory, albeit within a relatively narrow band. We pointed out in our weekly update on Saturday that it may indeed test the 1750 level, and it looks as if it is heading in that direction. Silver, in the early hours of this morning, actually jumped as high as $27.96, trying to touch that key resistance level of $28. Didn't quite make it. It fell, then recovered some lost ground. It's actually quite fascinating to watch on a live or 5-minute chart. A lot of day traders who are glued to their screens may have lost some money today if they were too fixated in small price moves and allowed their emotions to get the better of them, as the case for much higher and much lower silver prices could have been made at various intervals during the day. Of course, those like us who are stacking for the medium to long term, it really has little relevance. What has happened today has been an increase in yields and a slight strengthening of the US dollar, with the dollar index currently up 0.07 at 90.55. Equity markets are moving from marginally positive to marginally negative, though the Dow has reached a peak again today, while crude oil prices are up and rising. Treasury yields advanced to their highest in almost a year, as energy costs rose and the outlook for US government spending has sparked the prospect of some inflation, and thereby rising treasury yields result. Now, according to Bloomberg, published just over an hour ago, quote, gold has slumped more than 5% in 2021, losing ground after posting its biggest annual gain in a decade. Coronavirus vaccination drives and efforts to reinvigorate economies have dampened the appeal of the metal as a haven. With signs of a recovery from the pandemic undercutting global demand, bullion's 50-day moving average retreated below its 200-day counterpart, a so-called death cross technical pattern that may presage further losses. Higher yields, and in particular rising real yields at open, are hurting gold, said Tom Fitzpatrick, Chief Technical Foreign Exchange Strategist at Citigroup, Inc. Fitzpatrick also noted that the 1,765 to 1,795 an ounce range is important for gold. If that gives way, we could see a very sharp, deep fall. Now, Reuters wrote similar with the following words, more focused on equities. Quote, "On Wall Street, the Dow hit an all-time high on Tuesday, while the S&P 500 and the Nasdaq retreated slightly from record levels as investors bet on more fiscal aid to lift the world's biggest economy from a coronavirus-driven slump. The reflation trade continues to push equity markets across all industries and multi-caps, and this rally could continue in the near term," said Tony Bedikian, head of global markets at Citizens Bank in Boston. The Nasdaq dipped as technology stocks moved lower, while concerns over rising interest rates kept the benchmark S&P 500 little changed. The 10-year US Treasury yield rose above 1.3% for the first time in nearly a year on Tuesday, and the yield curve steepened as expectations of extended fiscal and monetary stimulus alongside hopes of an economic upswing added momentum to the reflation trade. The US dollar bounced off three-week lows as bullish comments from a US Federal Reserve official and upbeat manufacturing data helped arouse investor risk appetite. Against a basket of its rivals, the greenback gained 0.245% to 90.555 after earlier falling to 90.117, its lowest level since January 26. Bitcoin briefly soared above $50,000 to an all-time high, adding steam to a rally fueled by signs that the world's biggest cryptocurrency is gaining acceptance among mainstream investors and companies. The cryptocurrency was last up 1.5% at $48,649, unquote. Now, we did state in our video published yesterday, called Bitcoin versus Gold and Silver, episode 11, 50,000 Bitcoin this week, that we thought it was likely to happen. Though once again, that cryptocurrency has managed to move almost as fast as we're able to get our videos published. Now, we're quite impressed with silver's recovery attempts today, showing that it is supported below that $27 level. But it does look for now as if gold has run out of steam. Now, if rates do go higher, though, even silver will be adversely affected on the monetary side, but may pick up a little on the industrial demand side as lockdowns begin to ease and trade starts to resume. Now, interestingly, Christopher Lewis of FX Empire stated just a few hours ago, quote, "Silver is in a bit of a strange scenario right now, due to the fact that there are concerns about inflation down the road, but perhaps more importantly for the silver market is the fact that there is a ton of stimulus coming. It should, in theory, drive up the industrial demand for silver. Quite frankly, part of the biggest problem during the trading session was probably that yields started to rise in America, and that does make the US dollar a little bit more attractive. In that scenario, a lot of managers will tend to buy paper assets instead of hard assets, because you do not have to worry about the cost of storage when you can simply sit back and collect yield. All things being equal, this is a market that I think does go looking towards the $30 level over the longer term, but we have some work to do before we can get there. I would look at short-term pullbacks as more than likely offering value," unquote. And frankly, we tend to agree with him. But do you? Do share your thoughts and let us know. Meanwhile, thank you so much for listening, and if you haven't already done so, please subscribe to our channel, not forgetting to press the bell sign so you're notified of our videos as and when they're published, and we shall provide a more timely update tomorrow to see if there's any follow-through in the fall of gold and which direction silver is moving towards. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.